Yeah, well, one of the joys of operating in the steel industry is we go through cycles, and having come off several years of really strong macroeconomic conditions, we're now seeing the bottom of that cycle. There's a large amount of steel that's been exported out of China on the back of their softer domestic economy, and that's impacted prices in the Southeast Asian markets, which then affects our pricing in the Australian market. So we're seeing bottom of the cycle conditions in terms of our spreads or margins in Asia, and we've also seen some softening in the US, particularly towards the back end of the year. With some uncertainty, a federal election year, it's always a bit of an uncertain time in North America during a federal election, but we've seen some softening in the spreads in that market as well. So yes, we're seeing bottom of the cycle, which is the reason why our numbers are off.
You're absolutely right that a number of things are cyclical, but when you take a look at your shares, which are down year to date, what would you say to investors in terms of what is it within your control to be able to improve shareholder value?
Yeah, it's a very good question. I think what we've been able to do over particularly the last few years of really strong results is we've been able to invest in the growth opportunities that we will take advantage of when the market turns. Over the last 2 years, we've expanded our North Star mini mill facility by 900,000 tonnes. We've announced in our results today another 300,000 tonnes of capacity that we can add to that. We've also acquired some paint lines in North America that will allow us to take our COLORBOND product to North America. And in Australia, we're building more coating capacity again to allow us to grow our premium branded products like COLORBOND and TRUECORE. So rather than waste a good period, we've actually taken the opportunity to invest in the business for those medium and longer term strategies that will, I think, bring enormous growth to the organisation and value to the organisation while still rewarding shareholders.
Mark, it's Sam here, and you say you're no stranger to cyclical trends and downturns. And, when you look at the Chinese market, I'm curious how you're trying to navigate this given the structural transition we're seeing to effectively lower growth of higher quality, and that really means a shift in some of the market dynamics around the commodities that they're buying. And if I could add to that question, as we see the downturn in China because of the property sector, where are some of the opportunities in Asia? How are you looking at India, for instance?
So we have an investment in India with Tata Steel, who are fantastic partners for us, and we're seeing enormous growth in that market. I'm in forecasts of that market growing from 100 million tonnes a year of steel to 300 million tonnes a year of steel. So that's a phenomenal growth opportunity. But much like the rest of Asia, the opportunity that we see are in the higher value-added and premium branded products that we bring. So products like COLORBOND that we've taken from Australia and New Zealand and exported into Asia and into India and China. There's a requirement for more sophisticated and higher performing building products as those markets mature, as customers demand better performance from the construction products that they're putting into their investments. So we see that as a real opportunity, not just in India, but across our ASEAN footprint more broadly for us to continue to grow in that premium branded space.